Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to Trends with Benefits. Today I'm speaking with Chris Versace, Chief Investment Officer of Tematica Research, and we want to talk about thematic investing, what it means, how to do it, how to implement it in your portfolio. There's a lot to talk about, a lot of different themes that are really happening out there today, and I'm really grateful for Chris to be on. Chris, welcome.
Well, thanks, Ed. Thank you so much for having me. This, thematic investing is getting a lot of attention, not just in the US, but really increasingly in Europe and around the globe. So I'm very happy to be here. I'm very happy to talk thematics. It's kind of how I think about the world. So let's do it, Ed.
Let's do it. It's interesting you mentioned Europe because I was looking at some research the other day in a report that Morningstar had did, and I didn't realize how big thematic investing is in Europe, and that so much of it is actually done on an active management standpoint as opposed to passive like the U.S. is. But you're right, like it's been record flows globally. I think it's been record flows in the U.S. even this year. Is thematic investing new, like say in the last 20 years? It seems like it's really gained steam, or is it just repackaging of something else?
So the only thing I would point out too is, if you talk to, we have some friends at the Hong Kong Exchange, and they will tell you that thematic investing is simply off the charts there as well. I think in 2020, it was the preponderance of inflows. And I think it might be down percentage-wise in 2021, but it's still very, very strong. So it tells you that thematic investing is really global. And I think there are a couple of reasons for that. I think, candidly, a lot of the drivers behind thematic investing, which I'll talk about in a second, or at least the way that we see them at Tematica, are indeed global in nature. So you want to see everybody kind of participate. Is it new, I think was your question. And, back in the olden days, when I was first on the equity research side of things, there were certain themes that people would play out, but they were more small themes, and they were actually housed inside more traditional sector-based research. And so I saw some of that. You would have some would be cyclical, some would be secular, but there was no. And just to give you an idea, this was around 93, 94, 95, right? So there wasn't this wave of horizontal change, right? There was a lot of vertical thinking, right? Because you were trying to figure out within a equity research category, what are the best companies in this slice of 10 sectors that I have to cover. But it wasn't until later, around 2002, 3, 4, when I was starting to cover the mobile phone industry, right? And I was just seeing a lot of the technology come across, and I was thinking, wow, there were a lot of things happening both in this vertical, right? But there's a lot that's going to change as a result of the technology that's being unleashed, right? So that's that horizontal impact. So I really started thinking about it, and along the same time, I was also thinking more and more about, geez, why is it that so many portfolio managers underperform their benchmark, right? Is it because they're focused on sector investing, that sort of thing? And like a light bulb went off in my head, so to speak, that perhaps there's a better way, right? And that's how I really started to think first about thematic investing. I don't claim to be the first person to have invented thematic investing, but I think I've been thinking about it for a long time. And again, to circle back to your question, I don't think it's new. I think it's come into its own in a more meaningful way. And I think there are reasons for that. Probably the biggest, honestly, is the evolution of some of these companies that are out there. For example, Apple, right? You would say tech. Some people might say, wow, that smartphone, that iPhone is still so integral to my life that it might be a consumer staple. So I think the way that people are viewing companies, their products, their services are changing, but also too, we've seen a lot more disruptive change. Yes, from technology, psychographics, why people are buying them, and we talk about that a little bit. The economy, some regulatory mandates that we'll touch on if we get to our cleaner living investment theme, and others. And when you sit back and you look at all of these influences, they are really the driver of changing landscapes, i.e., structural change. And I think what we've seen over the last, decade plus is the acceleration in structural change. Back in 1999, 2000, the internet, and it's just continued.
Yeah. How much would you say the decades long bull market in equities has contributed to thematic investing or the growth of thematic investing?
That's a good question. It's not something that I've actually, pondered before. I think I would say that it's gone hand in hand. If anything, I think that when you have these prolonged bull markets, you have people who kind of want to get into the market, right? Fear of missing out, you only live once, whatever, because they don't want to be left behind. But I think when you marry that with people that are looking for investment strategies that are recognizable and relatable to them. Now, if you go back to, where is it? I got it here somewhere. Peter Lynch's great book, One Up on Wall Street, right? He was following something in the classic, I think it was Legs example, where he followed his wife and her friends around. Something was recognizable, relatable. People were buying them, right? So people want to, I like this product. I see people adopting this product or this service, what have you. And I think that helps contribute in. But again, going back to my comment about sector investing, and I won't, harp on sector investing is dead. But I think it's silly to try and capture thousands upon thousands of companies in 12 main categories. I think there's a better way. I think there's a better way to capture how companies are evolving their businesses, the things that they're trying to pivot into, and of course, what's really driving their revenue and their profit. So, again, just to go back to Apple, just really quickly, originally the Mac, right? Now the Mac is a much smaller piece of its business. They have services that are coming up. But today, this digital Swiss Army knife that we all rely on, especially coming out of the pandemic, remains the biggest driver of its sales and profits. And we're starting to go through a massive upgrade cycle because of, a technology revolution, 5G, and we're at the mouth of that really unfolding, and it's going to bring eventually the connected, really bring the connected car, the autonomous vehicle, IoT, and other markets. So we've got a wave of disruption coming, but that's, how do you define that, right? It's going to touch on industrials, touch on autos, and the like. It's not just
one sector, which is interesting because what was it? Maybe, I don't know if it was 2011, but several years ago, GICS changed the way they classified some technology companies, right? Like Amazon and Facebook. Facebook became what? Communications. Amazon became retail.
So they've done that a little bit. Remember, at one point the big thing was they broke REITs out.
Yeah.
Ooh, right. But REITs is another catch-all category, right? Because there are REITs that deal with doctors' offices, medical facilities, data centers, for example. So that's if you're asking what's the real driver of that, yes, the structure is a REIT, but the drivers for different REIT companies vary based on the exposure of their business and what's driving them. So, for example, if you're like Equinix, Digital Realty Trust, or some of the others that really focus in on data centers, they're booming, right? Because of the unquenchable demand for whether it's content, streaming, how we pay, social media, how we're working increasingly, how we're learning, right? That's exploding. If you're a New York City apartment REIT, the last 2 years have probably not been very good for you.
Well, tell me a little bit about Tematica and what you guys are doing in the thematic space.
Sure. So, we originally started off as a investment newsletter business, and that just gets, if you think of everything that I've done with my background on the equity research side, you take a look at some of our team who've got great global macro chops, right? We started off as a newsletter, and some of our advisors and friends had said, you really should take some of these themes that you've got and create indices around them. So we did what anybody kind of new to it would do. And we went down to Inside ETF and we talked with a bunch of folks just to kind of kick the tires. And is there something there that we can do? And the answer we found was yes, because we were able to not only construct indices based on our thematic scorecard, which I'll talk about in a second, but we were able to supply content as well. Right? Explain the strategy, make it recognizable, relatable to not only, potential partners, but to their end customers, right? Which could either be RIAs or more, or even go one step further to the individual investor. So that was a different value proposition. And if you were to flash forward, we currently have, I believe it's 5 ETFs in the marketplace, or 5 indices that are supported by ETFs. The preponderance are in Europe. We have one in the US as well. And we've got some other strategies that we're working on, both indices and other, that will probably support some other products at some point in time.
How do you guys go about defining a theme? Now, you mentioned like sectors before. Sectors, we all kind of learned what those were kind of growing up in school, in terms of you needed companies that all kind of behaved the same. They fit into a particular category, had the same kind of business.
In theory,
right?
Yeah, in theory, yeah.
And then how does one go about defining a theme?
Sure. So I alluded to it earlier, but let me just kind of set the table for this part of the conversation. Different people will identify themes differently. Okay. The way I can't speak to how anybody else does it, right? I can only speak to how we do it. We look for changing landscapes, again, economics, demographics, psychographics, technology, regulatory environment that gives rise to a structural change, right? Structural changes do not happen overnight. They unfold over time. There are companies that, pivot in or lean in to the structural change, so they drive that changing revenue stream. And there are other companies that, for whatever reason, maybe they can't get out of their own way, they don't believe the structural change, what have you, they kind of fall by the wayside. I'll give you 2 examples. The first example of structural change that I think that a lot of people are talking about is 5G. 5G, without a doubt, a structural change. But here's the question, Ed. Is 5G a theme? Some people think so, because there are ETF products out there that are solely based on 5G. I would argue that that is not a theme. That is a technology. There's a larger theme at work. And we can hit it from 2 ways. The way that we do it is digital infrastructure and connectivity, right? And I say it's not the theme because digital infrastructure and connectivity has been an evolving theme over time. 5G is simply the latest iteration in this technology. We've had 2G, we've had 3G, we've had 4G, right? And believe it or not, the work is already being done from a standards body basis on 6G. And if I have the dates correct, 6G is going to probably debut in some beta form in South Korea, I think in 2027. So that's something there that is, the difference between a technology and a theme. There are other examples that we could talk about, but I would say products. So for example, smartphone, it's a product, not a theme. The why behind the smartphone and the implication of the disruption of the smartphone, that could play into a theme. But there's other ones too. And it's, I apologize for, rattling off a bunch on technology, but there's other examples. For example, we have, in terms of themes, the cash-strapped consumer, we have rise of the middle class, we have cleaner living, aging of the population. And again, they all tie around some type of structural change. And the reason we do that, and just to fully connect the dots for your listeners, is if we're trying to deliver outperformance, how do we do that, right? That's the holy grail, right? Everybody wants to outperform, either preferably on an absolute basis or at a minimum on a relative basis. But how do you do that? So go back to my comment earlier with the FactSet data that's out there, where the vast majority of folks don't outperform their benchmark, right? So if we believe that the sector-based way is the way a lot of people go about it, then clearly it's flawed. You need to think differently, as Steve Jobs said, or as I like to say, view askew. Take your view and shift it a little bit. And that's really how we got into thematic investing. But if you take it one step further, if you're seeing pronounced structural change, you're identifying the companies that are benefiting from it, you're sidestepping the companies that are being left behind. What that means is you're really isolating on the companies that are going to see significant revenue growth over the structural change, profit growth over the structural change. And what do we know about companies that deliver superior EPS performance, right? They tend to see not only EPS growth, but they tend to see multiple expansion. That combination is the secret sauce behind the holy grail word that a lot of people go for, alpha.
Yeah, do you see thematics as really just a way to garner additional alpha in a portfolio, or can it be used to lower risk?
I think it could be, let's say this. I think we're around somewhere between thematic investing 2.0 and 3.0. And I think that for so far, there's been a lot of, and I'll just speak to products in the marketplace. I think there've been a lot of products that have been more that fad, if you will, that product, if you will, or that silo. And I think now we're starting to see this real holistic view emerge, which I think is great. But I would also say that there are other ways to use thematics as part of a strategy.
Yeah, I think that's really important. We do some thematic strategies ourselves, but we're very selective. We use revenue as the basis, but it can be tough. In the future food space, that theme is still evolving. There's a lot of private companies, a lot of smaller companies. When you're trying to build an exchange traded product, you're also concerned about liquidity. So you want some slightly larger companies as well. And then, just delving into the numbers, I think that's super important, and making sure that there is some kind of exposure. I think when last time we talked, I talked about the video gaming space, where in the index that our subsidiary has, it doesn't include like a Microsoft or a Sony, even though they're huge in video gaming, but their revenue is small from video gaming.
You're 100% correct, right? So like in our cleaner living space, where you're really trying to capture the shift in consumer spending towards products that are cleaner, organic, natural, better for you, better for the environment, right? You could say, hey, Chris, is Amazon in there? They own Whole Foods. Whole Foods is big in this space. And we would say, yes, but Whole Foods is this compared to Amazon. And there, you're not really just measuring up against the Amazon e-commerce business, but you're really measuring up against AWS, which I think most people know is the bulk of not their revenue, but their operating profit and cash flow. So you really need to be disciplined on it. And I understand that there are folks that need to liquidity optimize and therefore include certain names in. But I think over the long term, you really want to focus on the purity first.
Do you consider thematics also in terms of return potential? There's themes that are happening that maybe don't translate into outperformance. Is that right?
Let's think about this for a second. I would argue that there are sectors that at any point in time don't outperform. I think that there are times, shorter duration times, maybe it's a quarter, maybe it's 2 quarters, that a thematic might underperform either on an absolute or relative basis. But if we look over, again, that multi-year view, we tend to see significant outperformance. It's the old Wayne Gretzky, quote, I go where the puck is, or not, I don't go where the puck is, I go where the puck is going. That's what we try to do. And I would say sometimes the biggest, or not the biggest risk, but a risk to thematic investing is perhaps having the theme right before, sorry, Malcolm Gladwell, the tipping point. From my perspective, like as long as we're continuing to get a preponderance of confirming data points, right? And I mentioned those 3 areas that they can be generated from, but just look at the digital news that you get. It's, if you read the tea leaves right, you can find those confirming data points.
Now, how do you approach building a portfolio for somebody? I mean, is a theme, should they have a thematic bucket, almost like an explore bucket over their core, or should they build a portfolio just totally out of themes?
So that's kind of a loaded question. It's also arguably self-serving at the right point. But I will say this. I think that there are certain themes that no matter who you are as an investor, you want exposure to. Okay, I'll give you 2. 2 for sure, but I would argue I could layer in more. One example, again, digital infrastructure and connectivity, right? Multi-year, it's going to ripple through a lot of the ways that we do things. The second one, cybersecurity, data privacy. So that's actually an interesting one. So it encapsulates a couple of things. One is for us, our safety and security theme, right? It also encapsulates the digital lifestyle as we migrate into increasingly the digital world, but also the digital infrastructure because you need to protect the network, right? So it takes a couple themes and wraps it into something. The reason I say I think everybody should have some cybersecurity and data privacy is that as we move forward, we're increasingly putting data out there, and with 5G and then with 6G, whether it's, eventual IoT, connected car, what have you, an increasing number of attack points. That's a growth market because people need to protect all of those attack points. But also with digital privacy, there's penalties that are being established for companies that don't do that. So, those companies that help protect privacy identity, they stand to benefit as well. Cyber attacks, and we never know when they're going to happen. So if you were to say, Chris, this kind of sounds like a quasi insurance play. Like you just want to have a little bit in there because you never know what's going to happen, and you want to be able to benefit from the overall structural adoption of cybersecurity data privacy. I would say yes. Your question about a true portfolio, right? So I'm going to twist that a little bit. Some people like to do a portfolio of ETFs, right? Perfectly fine way to invest. Could we today create a portfolio of thematic ETFs the way that I've described them? I don't think so. Will we one day? I sure as heck hope so.
Now, you mentioned a couple different digital themes, and the first thing that goes through my head without even looking into them are, okay, there's two digital ideas. How many different tech themes can you have? And would you expect there to be, or what kind of correlation would you expect there to be between those two different themes or various tech themes? And how low do you need it to be to start combining some of these different themes together?
Well, that's actually a great question. So originally, when I first started and we were thinking about this, I want to say I had, I can't remember, 15 themes, 16 themes or something. And at one point we were kind of like, we could probably fold some of these into something. So if you were to think of cashless consumption, the connected consumer, there's one or two others in there. When you step back, what are the commonalities across those? And you would say, oh, that's the increasing digital lifestyle. So you could house a master theme that has, some, I hate to use the word silos. So I use, if you'll permit me, thematic slices, right? So you could do that. It's potential that each thematic slice could at some point, if you wanted to think about it, be a model portfolio of its own. It could be over time as more companies, like we were talking about earlier, kind of lean into that, perhaps it could get spun out onto its own. So there is one aspect of digital lifestyle that we are working on a strategy, an index product in Europe that is a spin out of that.
I'm going to talk a little.
You're not going to you're not going to ask?
No. What did I miss? What did I miss?
Sorry. No, what I said was there is one aspect of digital lifestyle that we are carving out as a solution for a product in Europe.
Which is what?
And I can't tell you that.
You baited me.
Well, I was, as you saw, I was making sure you were paying attention. And what, to be fair to you, I know having been in your shoes a number of times, I know you're like, you're listening, what's the follow-up question, but what's the next question I got to ask? So I totally get it.
Well, I wanted to talk to you a little bit about the themes that you guys do cover. And
sure.
So like I'm looking at your website. I don't know if that's the comprehensive list of themes that you have.
It depends on what you looked at, I guess.
But you got aging of the population, clean living,
yep,
digital infrastructure, digital
yep,
lifestyle,
yep,
disruptive innovators, guilty pleasures.
Yep.
I like this. Living the life, kind of more luxury.
That's the affordable luxury theme.
And then middle class squeeze, which almost sounds like a barbell approach if you invested in those two. But
I would agree with that.
And then you've got the rise of the global middle class, which probably leans towards international investing.
Yeah, I mean, if you want, I mean, it's so funny because as you're rattling them off, I'm like, yes, boom. So so a couple of things. The guilty pleasure theme that you mentioned earlier, I do like that theme. It's really focuses on inelastic goods that people buy really throughout the cycle, which is great. There is a point in time, I think, where it really outperforms. There are other points in time where it may or may not. To me, that's a theme that perhaps you, again, rotate into at the right time from a portfolio strategy. Are there enough companies to support that as an index? Not so sure.
I thought it was a nice balance to the clean living index.
Yeah, there's a famous quote out there by Abe Lincoln. There's an ETF issuer that has it on a T-shirt. It's one of my favorites, but it's akin to find me a virtuous man that has never sinned, and something like that. So cleaner living, guilty pleasure, It's almost like if you're doing a low carb diet with a cheat meal. There you go.
Yeah, right. So the guilty pleasure is not quite like the sin strategies that have been out there before in funds, like the guns, tobacco.
No, so we don't. No. So no defense, but like tobacco is in there. But you can think about chocolate, you can think about coffee, you can think about video games, you can think about other things that are inelastic, right? No matter what's going to happen, and arguably little indulgences.
I did want to ask you about disruptive innovators, because those are two words that have been used a ton in the investment industry: being disruptive, being an innovator. How do you screen for disruption?
It's a great question. So it's, as you can imagine, it's predominantly technology based, and arguably it originally started as kind of like a catch-all category for us. It could almost be a little bit of an incubator of sorts of concepts that we want. So for example, if you were to say, what about autonomous driving, AR, VR, big data, blah, 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 all that, right? A Kathy Wood favorite, if you will, right? So are there enough companies today for a pure AR, thematically pure AR, VR product? Without a doubt. But if we want to capture exposure to that, how do we do that? So we look for that. Ultimately, we don't have an index for that. I think it's more candidly an in-house strategy, or perhaps that's an active one at some point, right? So you can bob and weave over time with it, but the idea of disruption is still there.
So I rattle off a bunch of different themes. Are there other themes that you have identified or watching that you can talk about?
Yes.
Okay.
Yeah.
Like energy transition. Do you buy into that, energy transition as a theme?
Are you? So let me see if I can answer. Let's talk about that. Are you talking from the combustion engine to hydro, geothermal, solar, that sort of thing?
Yeah, fossil fuels to renewable,
cleaner living.
cleaner. Okay.
Yeah, there are some others, and here's the other thing. We didn't touch on this, but there are people who come to us and say, hey, we're thinking about this. Can you do it? And we'll be honest, there was a firm that came to us with asking for one particular strategy. We thought long and hard, and we said, no, can't do it. And here are the reasons why. Here are our concerns. And we've been proven right so far, but we can also figure things out for folks. As much as we have our own products, we will do some bespoke work. We'll partner with people if they really want to emphasize something.
So what's one long-term trend you see playing out over the next several years?
Well, I've got several of them. So I would say I've talked about digital infrastructure and connectivity. I think that has a multi-year leg strategy just because of the way it's evolving. I think cleaner living, when we're talking about the awareness that people have increasingly about what they're putting, as we like to say, in their bodies, on their bodies, in their homes, and in the environment. Another multi-year one, without a doubt. But the other one too, candidly, is aging the population. This is not sexy, right? But there is an element of disruption in terms of how we will wind up caring for the older generation, what their demands are. The way that they spend as consumers from the time that you're, early 50s to 60s to 70s to 80s and beyond, what you're spending on, how you're spending, how people are caring for you, dramatic change. And when you look at the future of particularly the domestic population, but this is true in other geographies too, we're increasingly going to be an upside down pyramid of aged people, and that has economic impact as well. So that's one that I think that it doesn't receive a lot of attention, but there's some pretty cool ways to think about that. And I don't want to plug it here, but have we figured it out? Yeah, kind of, sort of.
Excellent. Is there an ETF based on that?
Ed, you and I can talk more about that when we finish this podcast.
Okay. That sounds good.
All I'm saying is I don't think Van Eck has anything in it.
No, we don't have anything on that. And in fact, we've looked at it, obviously. We've maybe not extensively, but I think you're right. I think that's a huge trend given how many baby boomers are out there. One of the things I did look at, which higher ups didn't sign off on, was a death services strategy, which sounds, it's very morbid, but
yeah, but again, perhaps a model portfolio strategy of a handful of names. Not enough in my opinion to really build a product.
Cool. You want to play some trend or fad?
Sure.
It's our speed round. I'll mention a few different concepts, get your quick take on.
Let's do it.
Space investing, trend or fad?
Fad.
Bidets, trend or
What?
fad?
Bidets?
Bidets.
Fad.
I thought that could be part of your cleaner living index.
Sure. Well, first off, how many companies are really making bidets?
I have no idea. I have no idea.
So,
But it's a highly demanded part of new houses.
yeah, it was highly demanded when toilet paper rolls were like $17 for 4.
Yeah.
Right? Yeah. I mean, look, could it be? It could be part, like a micro part of a theme.
I was totally joking about that, but yeah.
Okay. All right. Sorry. Truth be told, when you first said it, I'm like, beignets. What do pastries have to do with anything?
Yeah, those are here to stay, the beignets. Finfluencers. Do you know that term? Financial influencers?
Yeah, those are the people who are making a lot of money on TikTok, right?
Yeah, I think you got to be in your 20s. And
Yeah, I'm a little old for that. I'm not quite flashy. Fad.
tiny homes, trend or fad?
Possible trend.
And collectibles, trend or fad?
I would say that's a potential theme. Now, there's some caveats to that, right? This is why I like this one, because the notion of collectibles changes over time, right? When I was a kid, it was comic books and baseball cards, which are still valuable, right? There's movie memorabilia, blah, 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 art's a collectible. So you have Sotheby's and others that do that, but it allows you to evolve into this concept potentially of NFTs, which is where I think you're really going.
Yeah.
So yeah, I mean, I actually think that that's a pretty interesting use of the blockchain, to be honest with you. I mean, it's exactly what people subscribe to it, right? It's something on the chain. It cannot be altered. There is a transactional capability to it, and it's traceable. That could be a theme. It might be early though.
Have you bought into crypto yet?
Nope.
Let me ask you then, cryptocurrency, trend or fad?
I like blockchain quite a bit, Ed.
You like that, the underlying technology? Yeah, I agree with that. Well, this is great. Chris, thank you very much for your time. What's the best way for people to find you, reach you, learn more about what you're doing?
Oh, I'm sure everybody's rattling off that ridiculous Twitter nonsense that I really don't like. I'm there at Chris J. Versace, but just go to Tematica Research. You can find me there.
Fantastic. Well, thank you, Chris. And thank you for tuning in to another episode of Trends with Benefits.